Hello guys, this is a new episode on GBPUSD on a monthly time frame, and clearly we can see that GBPUSD on a general trend on monthly time frame we are bearish. Right now, let's come to the current price action and see what the market has been presenting to us. So now, on monthly time frame, I can see that this is the last breakout structure we having at around this lower lower side at around this A level. So that's a breakout structure, and again we're going to spot what the supply zone which caused that this is the supply zone which caused that breakout structure. Right now we can see that this supply zone it has not been mitigated. Right, so this is the pullback for the supply zone, right? Because the supply zone has caused what? This breakout structure. Right, now let's look at this pullback which has been hunting that supply zone. Now on that pullback, uh, on externally we can see that we have that breakout structure. Again, we have another breakout structure, and of course, when we have a breakout structure, there must be a demand zone which caused that breakout structure. And you can see clearly this is the demand which caused this breakout structure. And again, for this second breakout structure, this is the unmitigated demand zone which caused what? That breakout structure. Right now, let's have at the current price action here now, whereby we have not mitigated this. Remember, we have not mitigated this supply zone, and we have not mitigated this demand zone at around this lower side. Right now, what do we have again? Again, I can see that we're having an FVG at around this level, whereby this market has mitigated that FVG and it's currently trying to react from there. Now let's have a look at the how these candles are reacting from that FVG. Remember, we are this market is supposed to be targeting this area, this supply zone, to do what? To have a sell, but we have not mitigated that supply zone. So now let's see if we can mitigate that supply zone. So now at around this level, I'm going to use the CRT model to do what? To spot some entries for buys, right? Or for sales. Now you can have a look at this bearish candle over here, whereby this bearish candle, it took out the high of that candle, right? And we had that sell. And also the same candle, the bearish one, you can see the low of it was taken out. So after being taken out, you can see that this candle created what? Something like, not even something, it created equal lows. And we all know that equal lows are what? These are liquidities lying at around that level, right? So this is liquidity which we might target to do what? To take out that liquidity. So we can see after taking out this low of this bearish candle, we closed inside the range of this candle, right? Whereby this bearish candle took out that high, causing this candle, this bullish one, to be what? Another block trying to push the market down to take out what? This liquidity, right? So when we created this liquidity with this bullish candle, we also swept the high of that candle. So after sweeping that, that was automatically that this market is going to do what? To have a sell, targeting these liquidity levels here to mitigate fully to this FVG on monthly time frame. Now, have a look at this. When we swept that high, we had a sell targeting what? This sell side liquidity. You can see that how we took out that liquidity level by this bearish candle. This candle is for October. Now coming to the November candle, we can see clearly that the November candle managed to do what? To sweep the low of October, right? And close what? Inside the range. So we're having this candle, this October candle, as what? Our range, whereby we'll be trading it on November and December, even up to January, right? So we have that low and we have that high. So this candle of October, it has given us what? A range, right? It has given us a range. Okay, now we can see that the November candle swept this low. So now according to time frame alignment of CRT model, right? So we are supposed to be going from a monthly time frame. We are supposed to be going on a daily time frame to look for an order block on a lower time frame to do what? Take the buy, because we are reacting from where? From a monthly FVG. That's a psychological zone, right? So we are supposed to be targeting this buy side liquidity because the sell side liquidity has been grabbed. So we are supposed to be targeting this sell side liquidity. But remember this, we have this candle here whereby it might act as what? As a trap to introduce early sellers around this level because we have not mitigated this supply zone. We have not even mitigated that supply zone. So I kind of see like early sellers will be introduced here whereby they will be trapped. So okay, on a lower time frame you can catch those sales, but generally on long term I'll be waiting for a sell at around that level, right? Now at this candle, this bearish candle, on a daily time frame we're going to look for a supply zone at around that level, which is going to do what? When we take out this buy side liquidity, market to mitigate that supply zone and give us some pullback, so that we can look for another re-entries for the buy, targeting what? This supply zone at around that level. Now let's go to the daily time frame and see how we could have gotten what? The buys from here, and how we're going to spot the sells on any psychological zone we're going to look for around this area above what? This liquidity level, right? Now let's go to daily time frame and try to see if we can get those zones. Now we say that this market is reacting from this LVG at around that level, and then we have taken out what? The October low. By the candle of October, the November took out the October low, right? And then after taking out that low, it gave us what? This order block at around that level. And you can see clearly that this market did what? It managed to do what? To mitigate that order block. And then this is the area you could have taken your buy, hold that buy till we reach what? That buy side liquidity. So that's how you could have managed to catch those buys. Simple as that. Okay. Now, maybe you could have said that this zone is too big for you, right? You could have said that the zone is too big for you. You could have even gone to, let's say, on 4 hours. At least you can refine that. Remember, this setup is coming from a monthly time frame, so you can swing trade that trade because it's the higher time frame is what? It's very valid. All right. Now the setup which is coming from a higher time frame is very valid. Now the 4 hours candle which you could have refined is this bearish candle inside this area. So you could have refined to that bearish candle, and you could have taken your entries from there, sniper entry, and stop loss just a little bit below that low. Then you could have targeted to reach to that area, right? Now using the 4 hours, now on the 4 hours, for the entries of the buys for next week, I'm kind of see like okay, for this low here we had that the breakout structure, and then we had this as the change of character, and then we came for the demand. Again we have this as the breakout structure for the buy, and then the market came for this candle all along at that area. And then we have this as our breakout structure at around that level there. We're having that as the breakout structure. Let's give it a name. Then where's the demand? And the demand is this last bearish candle at around that level. And again, currently we're having this breakout structure. And where is the demand now? We're having the demand. Going to take out this demand, this bearish candle here. the demand. But I'm kind of having this as an order flow at around that level, as an order flow whereby that order flow has been mitigated. But for the demand, supposed to be having that. Now, using the Fibonacci, you can see clearly this market has mitigated the equilibrium and the inducement levels has been taken out around this level here. The inducement level has been swept. All right, but remember we're having this unmitigated demand zone here, so you can even see this market stretching back to this demand, taking those buys around there. So you can have something like that, whereby uh, you can see that this pullback which came here, it came for the around this 50% here, and then we have that. But for me, if this market is going to stretch back to this lower side, then at around this level here, the 50%, whereby I have in this zone, we might expect some buys or from the extreme level, right? So let's wait and see how the market is going to do what, to present it itself to us. But currently what we have, we can see that we have this breakout structure here, right? We have that breakout structure, and the supply for that breakout structure, it's around it's this candle, whereby we've already managed to mitigate that supply zone. Now, using the CRT model, we can see that at this area, let me remove this breakout structure. At this area here, this bullish candle, we have managed to do what? To take out the high, right? But the low, we haven't managed to take that low, right? So we have to swap the high we're supposed to be targeting for this sell side liquidity, right? Now, according to this time frame, so for me, I'll be expecting some pullback. At least we take out this. If we take out this sell side liquidity, then we might mitigate this FVG. We're having some NVG around this level, or this market to push to this demand zone around this area, so that we can have the continuation of that buy, or this market continue pushing higher, taking out this weekly pending liquidity. Now, for if remember, we took out this weekly low, you're supposed to be targeting this weekly high. So that supply zone which I told you that we might get some pullback from there, is this from this zone. And you can see clearly on that zone, we have also again what, that imbalance around that level, right? So remember, we have this pending supply zone here on a monthly time frame, right? We have this candle, this supply zone on a monthly time frame, which is unmitigated, right? So keep an eye on these zones, right? Keep an eye on these zones. More so, if we get this pullback to this area, we're going to have that buy, or we might even, because you can have a look at the what happened on Friday. You can see we had swept that low there, so we might even have that continuation of that buy going up, or this market drops this level. But for me, I'm just waiting. If this markets take out this low, then from this FVG, I'm going to look for opportunities for buy, targeting this weekly liquidity or this pending supply zone here with confirmations, right? That's when I'm going to take those buys. So for these sells, for these buys from this lower side, that's how you could have managed to get to catch those buys, just using the SMC and the CRT model. So that's how you could have gotten that. Cheers and have a lovely week ahead.